Let's talk about the single biggest asset most people own, their home. What if you could tap into its future value and get a big chunk of cash today without taking on a single dollar of debt? Well, a new $2.5 billion deal is making that a reality for thousands, and it could completely change how we think about the wealth that's locked up in our houses. Let's break it down.
Okay, let's just start with that number. $2.5 billion. That is a massive, massive commitment that a major investment firm just made to a single idea in the real estate market. A number that big really makes you stop and ask.
So what did they actually buy for all that cash? It wasn't a tech company, it wasn't a skyscraper. They bought into a totally new way for homeowners to access their own wealth. Let's dig into how it works.
All right, so the two main players here are Blue Owl Capital, they're the investment giant with the deep pockets, and a fintech company called Point. Blue Owl is pouring that $2.5 billion into funding Point's core product. So to really get this deal, you got to understand that product first.
So what is this financial product that has investors lining up with billions of dollars? It's called a home equity investment, or you'll see this a lot, HEI. And here is the absolute most important thing to remember. It is not a loan. Think of it more like a partnership in your home's value.
Here's the core idea in a nutshell. An HEI provider, like Point, gives you a big chunk of cash right now. In return, they get a slice of your home's future value. So you get the cash you need today, and they get a piece of the potential profit down the road. It's a pretty powerful solution for folks who are equity rich, but maybe a little cash poor.
For a homeowner, the process is actually pretty simple. Step 1, you get your cash. Step 2, and this is the real game changer, there are no monthly payments. I'll say that again, 0 monthly payments. Then, step 3, down the road, usually in 10 to 30 years, when you sell your home, the investor gets their original money back, plus their pre-agreed share of the appreciation. Now, of course, that's the fundamental trade-off, right? You're giving up some of your future gains for cash in your pocket today.
This is probably the best way to really get it. Let's put an HEI side by side with a traditional home equity loan. A loan is debt, plain and simple. You have required monthly payments. Period. And the lender has 0 stake in whether your home's value goes up or down. An HEI is a totally different ballgame. It's an equity partnership. It's debt-free. The risk and the reward are shared. If the home's value actually goes down, the investor can share in that loss too.
So why are homeowners doing this right now? Well, it's for all the real-life stuff. A lot of people use the cash to wipe out high-interest debt like credit cards, which makes a ton of sense with interest rates where they are. Others use it to finally pull the trigger on that big kitchen remodel they've been dreaming of, or simply to cover other major life expenses without piling on another monthly bill.
Okay, so we've got the what. Now let's talk about the who. Who are the key companies making this $2.5 billion deal happen? You've got the platform connecting with homeowners, and you've got the capital making it all possible.
It's a simple but really powerful partnership. Think of Point as the company on the front lines, the ones working directly with homeowners to set up the deals. And then you've got Blue Owl. They're the financial powerhouse in the background, providing the massive checks needed to fund everything.
And don't get it twisted, Pointus is not some new kid on the block. They've been in this game since 2015. We're talking over 20,000 homeowners served and more than $2 billion in equity already funded. They are specialists in this space.
And their partner Blue Owl? Just look at this number. We're talking about a company with over $295 billion in assets under management. This isn't just a big firm, it's an absolute titan in the investment world. And when a player that big places a bet this specific, you pay attention. A deal this huge doesn't just happen overnight. It's the result of a relationship that's been building for years. And it's a clear sign that this whole sector is really starting to accelerate. Let's just look at the timeline. So this partnership actually started way back in 2018, and it's been growing steadily ever since. But things really kicked into high gear toward the end of last year. In November of 2023, they did a record-breaking $390 million deal, and that was just the warm-up act for the main event in December, the landmark $2.5 billion commitment. You can just see the confidence building and building. Point CEO Eddie Lim, he pretty much summed it all up. He said this deal positions us to scale even faster. This isn't just about business as usual. It's about hitting the accelerator big time. Now, this is a really crucial piece of the puzzle. This wasn't just an isolated bet on Point. Just one day before this massive announcement, Blue Owl completed another huge deal, a $283 million securitization with a different HEI company called Splitero. This shows a deliberate, market-wide strategy. They believe in the entire HEI sector.
Okay, so we've seen the deal, the players, and the product. But let's bring it all home. What does all of this mean for the average person? For the future of home equity, what does it mean for you?
Well, the direct impact of Blue Owl's commitment is just staggering. This capital is going to enable Point to originate an estimated $10 billion in new home equity investments in just the next 3 years. That means this option is about to become much more widely available to many, many more homeowners.
So what are the big takeaways here? First, this is a new way for homeowners to tap into their wealth without taking on more debt. Second, the whole model is built on shared risk and shared reward. If your home's value goes up, everybody wins. And third, the biggest players in finance now see this not as some niche product, but as a major, legitimate asset class. But remember, it's also a trade-off, where homeowners exchange a piece of their future gains for cash today.
And that leaves us with one fascinating question. For decades, a home was a place to live and a nest egg for retirement. But now, with billions of institutional dollars pouring into the space, we really have to ask, is the future appreciation of your home about to become the next major asset class that gets traded on Wall Street?